Ladies and gentlemen, welcome back to the Crypto News Podcast. Your host here, Matt Zahab. We are buzzing as always. Beautiful day in the city, and I'm pumped for this episode. We got a good one coming in hot. As always, folks, we are recording on Thursday, July 3rd. This episode will air on Monday, July 7th. If you're Canadian, happy Canada Day. A couple of years ago, talk much. And to my American friends, happy 4th of July. You guys do it way better than us. I wish we got after it as much as you guys did and celebrated like you guys did, but c'est la vie. Time for the intro. Today we have Wyatt Lonergan on the show today, general partner at VanEck Ventures, where he drives the firm's strategic investments in emerging technologies and innovative ventures. He joined VanEck in 2024, bringing a wealth of experience in corporate investment and venture capital. Before joining VanEck, Wyatt led the investment team at Circle Ventures. Wow, pumped to get into that, where he played a pivotal role in identifying and nurturing high growth opportunities in the digital asset and blockchain space. Also holds a Bachelor of Arts in International Business and Management from Dickinson College. Wyatt, welcome to the show, my friend. Pumped to have you on. How you doing this lovely morning?
Doing awesome. Thank you for having me. Excited to be here.
Pumped to have you on. What a week, eh? Like, Robinhood kicks off the parade this week. I mean, I think before Robinhood, there were some talks about tokenizing stocks, and then Robinhood just comes in and says, you know what, we're not only going to tokenize stocks, but we are going to throw a party that looked like a royal wedding. That looked like a Jeff Bezos or a Mark Zuckerberg wedding, like Vlad's in like a Miami Vice pimp suit. This venue looked like it was out of a picture book. It just crazy stuff. But I think a good place to kick off the show here. How wild was that announcement? And to segue, how wild was the follow-up announcement yesterday from OpenAI being like, actually, guys, we don't condone this. We never gave Vlad or the Robinhood team the green light, and what you're seeing is not legitimate. What a wild week in crypto.
Yeah. I mean, it on one hand, it's super exciting. On the other hand, it kind of shows a lot of maybe gaps in the market or misunderstandings on how these things can work, because there are several critical elements to tokenizing any asset for that matter. And so they're completely different, and they pose different structural problems and different risks. So yeah, super exciting. Robinhood always does things with a bang.
Yeah.
They are aiming to be the super app. They are catering really, really well to that customer with Gold Card, with mortgages, with crypto. And I think, kudos to Vlad. He, like maybe several other companies, I would put Stripe in this category as well, saw that there were, huge, tremendous benefits to their business to run the infrastructure on blockchains and use things like stablecoins. They got into the global dollar network early with Paxos, and if you were already kind of building in this space, you could see the benefits of tokenization. And so they started working on tokenizing two very distinct and different assets, which we can go into: stocks and private company shares, publicly traded stocks and private company shares. So really exciting. The interesting thing is actually there's been a lot of work done in this category dating back years. So there are two companies in particular that really stand out. Bakkt, who is working with Kraken on X stocks, and a portfolio company of ours called Denari, who actually just became the first US SEC registered broker-dealer, SEC and FINRA registered broker-dealer, with explicit permission to tokenize stocks. In addition, they're a transfer agent. There are two very different approaches. One is kind of more of an offshore approach using an SPV, I believe, out of Jersey. Robinhood is doing the same thing out of Liechtenstein. The Denari approach actually stems from the United States, where they are the regulated broker-dealer and transfer agent. They sell those assets to some sort of regulated intermediary like Gemini. Gemini is licensed under MiCA and is able to then go sell these tokenized stocks to customers. How this is going to play out, I think, is going to be really, really interesting, because it's not just what are the laws. The laws are actually, I don't think, are really going to change on the security side. It's going to be the laws of how you can use these assets in DeFi. But importantly, liquidity, which is something that everyone has commented on quite a bit, that's another core issue. But kind of beneath all of that, what are we trying to do? We're trying to create a standard that everybody can adopt, because if you have one tokenized standard around this, or a few, you can create much greater or deeper liquidity and actually start to make these networks work. One analogy I'll give you, and I'll give credit to Tom at Dragonfly. I was on a panel with him yesterday, and he brought up this really interesting Uber example, which I love, which was like 10 years ago, it probably sounded crazy if you said, like, I'm going to call a taxi at 2 a.m. in Bushwick and it'll be here in 5 minutes, right?
Bonkers.
But now it shows up. And so once you have enough demand, the market makers, once you have the takers, the market makers will show up. And there's clear demand for these assets, and I think this space will grow. The question is, so that's how you bootstrap liquidity. The question is, what standard will the market pick? Will it be Robinhood? And I think the concern there is that they're an exchange, right? What other exchanges would plug into some other exchange's standard?
Yeah.
Feels unlikely.
Yeah.
You have Backed, which is technically not following the US laws around securities because there aren't any restrictions from stopping a US customer. I can go on with a VPN today.
Is Backed consumer facing or is Backed on the back end?
Backed is X stocks. It's not necessarily consumer facing. It's just the asset issuer here. And then there's Denari. And I think the Denari, I mean, I'm an investor, so you should take this with a grain of salt, but like our bet is that this time is a little bit different when it comes to regulation, and the securities laws, again, you should not expect them to change.
Yeah.
But more importantly, there's certain customer protections that can come with that. They have to be audited. They're regulated by the SEC and FINRA. There's SIPC insurance when you actually go and you buy from these different regulators and entities.
Yeah.
And so my bet long term is that the largest financial institutions and tech companies would rather plug into some solution where they always know they have a claim to the underlying asset.
Yeah.
That they can always sue the counterparty.
100%.
There's some legal liability and there's protections around, ensuring that this doesn't flow into jurisdictions where it is non-compliant. And in this case, I think this will change very soon, but you are unable to go sell to a US customer unless you're a US broker dealer.
Yeah.
So that's kind of the issue, right?
Yeah.
And if you have no restrictions on any of that, it becomes a very challenging model because day one, you violate securities laws. So there are penalties, including fines and potential prison sentences that I think makes that really challenging.
Yeah,
5 years ago, you probably could have gotten away with that. Today,
Yeah.
I think it's a little bit different, far more educated.
A little more tightened up.
So it's going to be a really interesting, 6 to 12 months to see how this kind of battleground around tokenized stocks takes place. But our bet as well is that neutral network should win. Yeah. There shouldn't be a standard that's run by one exchange.
I agree. Wow, what a way to kick off the show. Why? One thing that I honestly haven't really seen, I think I saw one person post about this on Twitter, and I was explaining to my girlfriend who's not in finance about this, and she was like, Matt, what the fuck are you talking about? I don't care about this. But I was just, because I find this very interesting. But I was like, with all the European slander and all the European chirps going on right now, everyone's making fun of the European economy and how, all they created is the bottle caps. I'm sure you've seen all those memes everywhere, whether it's for, good or bad, regardless. It's just some casual banter and having fun. If I'm the EU, I'm sort of pissed at this because if I'm already having trouble to get my own citizens, EU citizens, to invest in EU stocks, and then the best American stocks and the best American private companies are now investable in the EU. I'm like, damn, this sort of sucks. I don't think that got enough attention. Maybe I'm overlooking this and I'm only focusing on a bit of the qualitative there, but that's something that I didn't think got enough attention. I'm surprised there were no crazy viral memes on that point either.
Well, it's because when it comes to crypto regulation and standardizing, even like crowdfunding across Europe, they just, one, it used to be so. We have these things called blue sky laws here where if you're using these crowdfunding exemptions, you don't have to register in every state.
Yeah.
Previously, they had that, and they created kind of more of a blanket approach across all of EU member nations. And then separately, MiCA, they just beat us to the punch on crypto regulation. We had Gensler, we had Biden. Now we have Trump and Atkins. We're moving at a far faster pace. I don't think that's such a bad thing. Let them invent the bottle cap. We'll create something better. And I think what we're about to put out with the Genius Act and potentially the Clarity Act or whatever market structure bill follows will be better.
Yep.
And separately, we're trying to create sandbox environments to really just enable and increase innovation around these categories. The one caveat that we have that we always look at with portfolio companies is it still doesn't change the law. And so if you look at 3 of the biggest companies in crypto now, Coinbase and interestingly Stripe and Robinhood, they all have some common denominator, which is Robinhood, or in Robinhood's case, they're a broker dealer. Coinbase is also ready to become a broker dealer if they need to do this. They got the licenses back in 2019. Stripe, MTLs probably acts as a money service business as well. I don't know all of their licensing, but they're able to commercialize the technology and still do it in a compliant manner. And I think whenever it's non-custodial, then you could see some overlapping of these two worlds. And that's where we need regulatory clarity. Well, what is a security? What isn't? We're going to get that.
Exactly.
And then how do you actually start to use these I think the word decentralized is often thrown. It's kind of more important that it's non-custodial than decentralized.
Yeah.
Maybe decentralization factors into the Howey test for securities.
But a lot of people don't want the full decentralization aspect either. When they hear the word, it's sexy to them, and they're like, oh, this sounds really cool, and screw the banks, and I want to do this myself. But you don't want to all the time. Like, you still want a centralized entity to control some part of that, probably the security aspect, the insurance aspect of it. But I agree with you.
I think
it's
that's
about
the trade-off you're going to have.
Yeah.
So, but in some parts of the world, we don't have basically centralized platforms that extend to those users. And that's where DeFi becomes like a very powerful primitive, as does anything non-custodial. So I think that the rationale for like why you would take the Xstocks approach today is that like, you're going to go service those users, right? You just can't get access. And I think again, you're solving for kind of two different things. And there's actually the same example with OpenAI, or the OpenAI Robinhood thing. They're just trying to solve for access. They didn't really tell you how they did it. It was just a cool marketing announcement, of course. We know that this is a really hard thing to solve for. However, if OpenAI hadn't said that, I would have said that Robinhood just, went, bought an SPV, told OpenAI they're going to go do this. And behind the scenes, they just covered all the costs and gave it to users for free.
Exactly.
I was surprised to see that OpenAI was not involved, but I'm not surprised to know that, yes, companies have a lot of control over their cap table, stock restrictions, information rights. So this is the problem in secondary markets for private companies. But I will say though, like, I think with all these things, like, there have been amazing counterpoints that have been presented on X. I still want to call it Twitter, on X. And I think they're all correct, but it doesn't mean that you can't solve these problems.
Yeah.
Right. Like, I think at some point it's going to be a competitive advantage for companies to raise from the crowd. If Sam Altman doesn't do it, Elon will do it. If Elon doesn't do it, Perplexity will do it.
Yeah.
Right. In like every industry, you're going to have this open and closed kind of transparent and non-transparent trade-off. And if you can build an army, right? We've seen what that does for Tesla stock. We've seen what that does for SpaceX. These companies will explode into the private markets. This is actually something, so a little backstory on myself and how I got to Circle was I worked for a company called Seed Invest, which was the first broker-dealer to receive an alternative trading systems license to do securities using we're the first crypto company to get this. We were acquired by Circle in 2018. So what we were trying to do is enable people to raise our retail investors to buy tokens from companies. Companies could raise money on our platform in a compliant way, sell tokens or sell equity, and then create a secondary market for those assets. We were just like way too early. Circle has been really early to a lot of these things, but Jeremy Allaire saw the reason of like, one day it's going to be a competitive advantage.
Yeah.
So actually Circle attempted to do all of this in 2019.
It's too early.
Interestingly, Binance tried to do it in 2021 and they were shut down.
Yeah.
And I think there's so many other concerns that I could bring up. Like, there's a chance Apple could go to a regulator and say, like, there's always people holding these tokenized stocks. Like, I didn't authorize this. Like, go freeze this smart contract or tell them to, or we're going to fine them. Like, there's so many things. But the more and more companies you start doing this for in the private markets, the more it just becomes a trend and an option. So whether it's like early stage or right before the IPO, it's really clear that this is going to take off. Totally different than public securities. I think that's just like, we need clear regulatory guidance and compliance, and then you just need to start building liquidity for it.
Yeah, well said. Wow, you're on a roll here. We got to jump into Circle. Before we take a deep dive into Circle and just stablecoins, maybe not a deep dive into Circle, but deep dive into stablecoins, you obviously are one of the few people who can give a deep dive into stablecoins, as you did work at Circle. But give me your best Circle story you have. If you're at a campfire, 4th of July weekend, couple pops going around and someone says, Wyatt, give me your best Circle story. And then, because the fire alarm's probably going to go off, I'll get you to segue into present day stablecoins, what's going on, PYUSD, PayPal, the whole 9 yards, because again, this thing's going to go off. But give me the best Circle story and then segue into stablecoins. And my apologies for just throwing all this at you because I'm about to get cut off in 10 seconds.
I have many great Circle stories. I met my now partner in this fund, Juan, at Circle. We helped start Circle Ventures together. We invested in, I think, close to 100 companies together and 15 venture funds. So there's a lot of stories. One thing I think was super interesting for me personally was in this journey to help companies, to try to basically allow companies to do compliant ICOs back in like 2018, 2019. I was able to meet some incredible characters. And I think one of them I will never forget is I went to go meet with Anatoly at the Solana offices in San Diego. And this was before they ended up going with CoinList, because as a broker dealer, we just were kind of more or less explicitly told, like, you can't do this. And so we never were really able to fulfill our vision on it. And interestingly, now you have companies like CoinList, Echo, Legion, who I think is doing this in a compliant manner in Europe and in the US soon. Now that vision is coming to life in 2025 because of regulators. But the funny part was, I think he did the sale at like 3 cents or 6 cents, something like that, right? So it would have been...
That was the first sale for Sol?
The first, one of the first public sales. Yeah, if I had to look it up, I think it was at like 6 cents.
Oh,
I'll double check it right now, but
that's wild.
No, it was insane. And so there's one in 2022. Sorry, there was one for 22 cents, but I swear to God, there was one that was lower. But it's just really funny. Like, or it says 22 cents. Maybe it's 22 cents. It's just insane, right? This is one of the, best performing crypto assets. And because of the regulatory posture at the time, like, no one could get access to that. And I'll be honest, like, even internally, not necessarily within Circle, within kind of Seedmets camp, like, it was seen as like kind of crazy and really wild, wild west. And like the laws that already existed, the reason is they just didn't apply. And that's why you have to have the Clarity Act or something like it come out, because it doesn't apply to a network token. And you would completely kill all secondary trading of this thing, or the ability to reward people or use a token within a network if it is a security. And there was just like, you could explain it to them 10 million times. Like Hester Pierce worked there at the time. She fully understood it. She tried. You just couldn't get buy-in. And of course, like, it's kind of funny because at the time, it was a really dark period. I think like that bear market that followed, it felt like crypto was over. And then the resiliency of the industry, like, it just came roaring back. And then you had Solana like hit like 240 just a few years later. So there's many examples of that, like Dapper Labs we looked at super early and couldn't get anyone comfortable with support on a fundraise internally. There's just, everyone was kind of like so anti-risk at the time from a regulatory perspective. I'm not saying Circle, Jeremy, I think, was like years ahead of the industry on all these different points. But every time we tried to do something innovative, the regulators shut it down. And so looking at the market today, all those little things that we tried, whether it was like tokenizing private shares, tokenizing stocks, real estate, compliant ICOs, are literally all investments that we have made today, which were just informed by all the work that we did back then. So it just reminds me that, like, to be rewarded, I think in this industry, you just have to have a lot of staying power and just like stay in the game.
Yeah.
So it's been super cool. Like, I know all these random things about specific laws in the securities world because, a regulator would be like, well, what about this? How do you design around that?
Yeah.
And I think we are still in the process. Actually, we need to design around a lot of these things, but we also need to kind of like upgrade the way that we think about them in relation to blockchains, because in many cases, these laws were designed dating back to 1933 to solve for market manipulation or information asymmetry, or just the fact that, like, disclosures always lag the market. We don't have real-time information. Well, with blockchains, we have real-time information. Yeah. So that doesn't mean you don't have to provide disclosures. It just means you can do it in a more efficient way.
See, why?
And so if it's also a more perfect...
You saying that out loud in 1933, like, that was almost 100 years ago. Like, what are we doing? Like...
Yeah. And so now we're finally updating them. And again, some of these things, like, aren't terrible, right? Like, of course, the objective was to protect investors and provide information. But again, as more people start using blockchains and as more of these assets go on blockchains, then the idea of like quarterly reporting doesn't really start to make sense. Like, you could report things in real time. That's that's a perfect world, and that's probably a long ways away, but we're taking steps in that direction. But more importantly,
like present day companies aren't built for that either. Like, a lot of present day companies are built for their quarterly earnings. Like, that's like your Fortune 500. That's what it's all about. When you hire your CFO, like, you bring him or her on to forecast for the friggin' quarter. Like,
and you gamify a lot of the system to optimize for that specific reporting event. So it's definitely changed. I think you're going to see a combination of companies, later stages, crowdfunding using crypto rails.
Yeah.
I think you're going to see companies using things like Superstate's opening bell to go public, or sell shares publicly using a blockchain. You'll see companies sell equity that won't be tradable, but it will be held in a wallet. These are all good steps in the right direction. But yeah, ultimately, like all those systems that were set up were largely paper-based systems. They led to the initial kind of like digital system. My partner Juan actually is writing about this now, because the whole reason the DTC got created was really because they wanted this kind of distributed node systems where all the partners could kind of act as the transfer agent and settle. But they were like, this is impossible. We don't have the technology for it. Well, like
Now we do.
Now we do.
Yeah.
So it's going to be really interesting to see how this plays out. My guess is it's not instant. It's probably going to be a combination of like new laws coming into effect, the technology really being used in the securities world. And then everyone will just say like, this is better. Let's switch.
Yeah.
But it's super exciting. So I think, my time at Circle, because it's really informed, our time at Circle has really informed a lot of our investment thesis today.
That's incredible.
And then segueing,
quick ad read, and then we're going to take a deep dive into stablecoins, because stablecoins are crazy right now. Huge shout out to Prime XBT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XBT, as they offer a robust trading system for both beginners and professional traders. Doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. And now back to the show with Wyatt. Okay, stablecoins. Circle came out. The amount of texts that I got over the last 3 weeks from my normie friends being like, what is Circle? What is a USDC? What is a Circle? Why? How can I use this?
Shape.
Why don't we have a Canadian stablecoin? Good question. Literally, so just badgered. Why is Tether worth more than Circle? Like I got so many questions over the last 3 weeks from my normie friends just about Circle. It took the TradFi world on fire, and we love to see it. I think, and I've told this story on the show a couple times, but my girlfriend's from Argentina. I met her in Argentina. For the listeners who are American or Canadian, like Wyatt or myself, we don't use stablecoins in our everyday life. Maybe Wyatt and I, because again, sorry if I'm putting words in your mouth. I assume you have a bit of degen in you, a bit of crypto degen in you, where you messed around on chain. You must have, someone of your stature. But I don't send Tether to my friends. I don't send Circle to my friends. If we do e-transfer, which is our version of Zelle kind of thing. In Argentina, everyone uses Tether. They don't use Circle a lot, but everyone uses Tether. Literally almost everyone. It's very powerful because their currency went kaput. So just for the people, it's not just about the yield, and it's not just for DeFi applications. The third world, and I wouldn't even say Argentina's third world, but countries without prominent currencies literally use stablecoins every single day, guys. You go to the coffee shop in the morning, you can pay with Tether or Circle. It's pretty darn awesome. But going back to you, Wyatt, TLDR, present day stablecoins, crazy momentum. Looks like it's taken over. We're in a good spot here.
Yeah. And just to clarify, stablecoins, what's interesting is that they can both be an asset and a platform.
Yeah.
So in Argentina, it's both. In the US, it might not matter as much. And so while I would actually say you may not know you're sending your friends stablecoins, you might indirectly be sending your friends stablecoins very soon. Or as you settle business transactions through Stripe, for example, maybe you're paying vendors or paying employees or something like that. You might also do the same thing. That's kind of the world that we're entering into. And then the probably third leg of that is any financial asset that you're buying that is on a blockchain, right? Bitcoin, ESOL, like maybe that's where your friends will start to use it. Long-term in Robinhood, again, they might use it and be spending it and not know.
Yeah.
And so we're going through this kind of interesting bifurcation where the asset itself is always going to take off as this kind of digital euro dollar. And again, there's two dominant forms of that: US registered Circle, EU registered Circle versus kind of offshore Tether.
Yeah.
And both serve a great purpose. Tether's feature being, offshore, not tied to the US banking system is a feature. It's not a bug.
Yeah.
And it's proven to be in really, really high demand. What Circle is going for is to leverage more of the platform, and the asset is embedded in the platform, which will likely lead to a future where most of this is abstracted away. But that platform isn't just for one specific type of financial transaction, right? It's not just like, oh, a stablecoin is a payment rail, and it's that. No, it's a payment rail for anything.
It's
So it's
literally
weird. You can't,
everything. This is
yeah.
this is sorry to
When
cut you
you,
off. This is what I tell my friends literally every time. My Canadian friends, you use a Canadian dollar. Just think of if it was digital and how much more useful it would be. This is stablecoins. It is
yeah,
everywhere.
but
It's
that's
going
why
to
it's hard to
swallow
break down
everything.
the data.
Exactly.
That's why it's
Yeah.
hard to break down this when you have 27 trillion of annualized settlement, which is now going to be much higher next year. People are like, oh, it's double Visa's volume, but it's like, it's not. How do you parse through the data to figure out kind of what, the annualized payment volume is? The annualized payment volume is probably X35. So we're actually more on the lines of like, it's like 1% of Visa. What's the rest of it for? The rest of it's probably for trading and buying Bitcoin sold, things like that, DeFi. That probably equates to 1% of DTC volume. So we're kind of like very much
Yeah.
in the kind of 1% range for both. But the way it's presented is one thing. So when we look at flows historically, we don't say, let's take all the B2B payment volume in the world, all of the stock trading in the world, all of the whatever, right? It doesn't work like that. You don't put private credit in this and then combine it in one stat and say like, this is the flow, right? At some point, then you just get to like M2 money supply and things like that. So
Legit.
that's
Yeah.
kind of how we're viewing stablecoins today. And I think the data is getting better and better. There's been some phenomenal reports that have come out around this stuff to try to break it down. So that is what is just really unique. And then I think the second element of it is people will often say like, you have Pix in Brazil, you have FedNow, you have Venmo, like, why would I use this? I think the best way to think about stablecoins is that they could still penetrate all of these platforms, but most of these things are verticalized. So it doesn't mean that they're bad, right? I can send money to you free on Venmo today. That's awesome. It's just if Venmo needs to talk to another platform, or if, Brazil, like you need to move money to another country, that's where stablecoins can really shine.
Yeah.
And so
You can't send me a Venmo. You can't. Canadian.
Okay,
That's
that's a great example.
Yeah.
So the second
Yeah.
that we start crossing borders or crossing platforms,
Yeah.
that's when the programmability of stablecoins. You hear people say this all the time.
Yeah.
A developer can use it to plug into these systems that
Yeah.
otherwise would not talk to each other.
Yeah.
Jeremy Allaire likened it years ago to the birth of voice over internet protocol. This is what is allowing us today, or video over internet protocol, to have this conversation. We're leveraging the internet to communicate with each other. This is kind of most similar if you assumed it was like value over the internet protocol. And so now we've created an over the top protocol that allows us to transmit value, which could be a stablecoin. But what's interesting is that stablecoins are just tokenized cash. So that's why the whole idea of tokenization is so powerful. That same token could represent data, compute, stocks, whatever it might be, right? There's millions of things that we could potentially tokenize. And so that's why if we start to move to these systems for finance or for other means of any kind of value, it just connects kind of the internet in a way that we've never had before.
Yeah. Well said. Let's talk yield. And we are getting a little tight for time here, Wyatt, and this has been a treat. You're absolutely on a roll here. We could do a Joe Rogan 3-hour epi here, but we both got shit to do. Okay. Yield. The Genius Act may be banning yield. I don't know how I feel about this. And I'll tell you why. Obviously, I love yield because who doesn't love yield? But the only reason why I don't like yield in this sense is because I do want stablecoins to onboard the masses. And I think the masses will look at this as, oh, this sounds like too good to be true. Maybe I'm way out to lunch there. It's just when my friends have asked me like, hey, how can you get 5% on Circle or Tether? Like you're holding, the bank gives me 1%. And if I'm lucky and you're getting 5% on a random crypto dollar, like how? And then I tell them how, but regardless, that's just my 2 cents on it. Do you think it's going to happen? Do you think yield's going to get banned? And do you think yield is a net good thing, net meh, or net negative?
No, I think yield is a great thing. If banks are offering you one product and someone can offer you a better product, like, isn't that why we update systems anyway, right? Like we're trying to collapse cost, remove friction, and add value back into the system. So the more that you remove friction, generally the better things are, the faster things move, costs collapse. And who ultimately benefits are the end consumers and businesses. So in this case, it feels like a direct lobbying effort, in my opinion, from the banks to protect their business. However, I don't think it's that big of a deal because I actually don't think the whole yield sharing will ever stop. I think what will happen is it will become a B2B to C thing. And so let's use a direct example of how this happens today and how it probably won't go away. Circle is partnered with Coinbase, who allows you to deposit USDC and let's just say earn 4% on their platform, right? That is kind of a reg arb for, and by the way, now you can do it in their wallet. So anyone around the world can deposit USDC into their wallet and earn 4%. How are they doing that? Well, they're not calling it yield, they're calling it rewards. who's going to stop anybody, right?
It's
If
true.
they're such a big distribution partner for Circle, Circle wants to expand the USDC pie, because ultimately these stablecoin battles, if you could really like dumb it down to a simple idea, is that they're battling to be the standard for money on the internet.
It's like
they're
credit
trying to be
cards.
the dominant dollar. But they're going to become like the internet native banks.
Yeah.
And so the internet, again, in that perfect world where this is all connected and all tokenized, if you're the dollar, like that's what people are betting on with Circle stock, is that they're going to go figure all this stuff out and they will become the standard. So it doesn't matter if their take rate is small today and they share a bunch of revenue with Coinbase. It matters if they can get the next 1,000 companies, tech companies, financial institutions to adopt their standard, and they will pay you to do it. Now, does that mean you can extend it to your customer? Yes, but it kind of depends on how big you are, whatever. Eventually, though, I think this all goes away and everyone can extend it to customers. It's probably just a V1 issue.
The TAM is literally, like you said, the TAM is like almost M2 money supply. Like the TAM is legit limitless. Like anyone who transacts, anyone who uses money, which is every one of the 8 billion people in the world, that is your target market. Like it is.
Why do the regulators love it? Regulators love it because it extends. You asked like why there's no Canadian stablecoin. Like, is there demand for Canadian dollars on a global level? I'd say probably not to the extent of US dollars. So that's why US dollar stablecoins have dominated. And so, yeah, regulators are going to love it and they're going to push it, and there's going to be capital control issues in other countries. But if you always have this permissionless internet, you can kind of get anything, right? So you might pay a premium to go get that digital US dollar rather than stuffing cash under your mattress in Argentina.
Yeah.
But, and again, might come with some costs to on-off ramp to actually get it back into fiat.
Part of the process.
But it's part of the process. And so it's not going away. And again, you want to be that dollar standard. So right now we kind of have $2 standards that have dominated. I would expect most major tech companies and financial institutions will try to go after the strategy. My only kind of short-term bet is that I think a lot of the tech companies will be averse to OCC regulation. They don't want to be regulated kind of like a bank.
Yeah, it's not fun.
And so you saw this with Apple Pay.
Yeah.
They just want to be close to the customer. They're happy to pay for somebody else to do all the regulatory compliance. I think the same thing will happen in the United States, and that's another reason why Circle is getting the bid right now, because Amazon, Walmart, they're all exploring it. Do they want to become banks? Probably not. Do they want to get the yield? Probably.
Yeah.
So this is another area where I think, again, the dominant money standard starts to flow towards Circle. Just the TAM of that growth they can grow into is a little bit different than kind of the offshore euro dollar market.
Yeah, well
said.
So
it's going to be fascinating. They're two very different approaches. But again, looking at it today, we're kind of in the 1% range. So there's 99% to play for. It's going to be a really interesting battle.
And I think 15, 20 years from now, this will be written in the history books that Circle and Tether literally I don't want to say single-handedly, but Circle and Tether have done so much for US dollar dominance, and it will be even more apparent 20 years down the road. And I think not a lot of people think about that right now, but like the euro very well could have done this if they wanted to. They could have been early. They could have been more chill. They could have been, they could have got the rules locked and loaded earlier. I think this is a very underlooked part, but we haven't even touched VanEck yet. Last question. Give me the deep dive on, well, we don't have time for a deep dive. Give me the TLDR on VanEck, what you guys are doing right now. You have so many incredible products. Maybe just talk about a couple of your favorites and what you have coming out in Q3 and H2 of this year.
Yeah. So to kind of break down VanEck, it's a 70-year-old asset management firm. We manage about 120 billion in AUM today. On the kind of crypto and private side of what we do, which is a lot of it is in the crypto world today, we have a research team. We have 2 liquid funds. We have new ETFs that come out in those categories as well. And then we have what I do, which is early stage venture. I have a $40 million early stage venture fund. So we're doing a lot. Like we're creating new exchange traded funds. We're deeply researching the equities and crypto asset markets as it relates to publicly traded companies or publicly traded tokens. We're investing in those, and then we're trying to identify, the new Robinhood, Coinbase, ETH, Solanas of the world that we think will break through. And I think, coming from Circle, the reason why I really connected with this group and was excited about what we're going to put out, we just put out one of our first tokenized products, which is a money market fund, as an example, is that there was just like, we both believe in this future of the financial system. And a lot of that is underpinned by stablecoins. And so if you kind of, were early and you were watching this trend, it was so easy to say like, well, we could do this, we could do that. Let's go build in this category. And so we announced this fund last October. We actually started it about 13 months ago. And as we were fundraising for it, Stripe acquired Bridge for over $1 billion. Trump came in, the SEC, Gensler left, right? Like all these things started happening. And finally the world could see the light at the end of the tunnel that like crypto is going to be a thing and it's going to be a really big part of the story. And then you have all the announcements every single week around tokenization, around stablecoins, Robinhood, Circle. So it's been really incredible. I think the timeline that we expected was probably like a few years. Compress that. Like, it's happened a lot faster. So every good idea in crypto is going to be some of the most competitive. I think these are going to be like some of the most competitive categories. And again, like, you know, it's been phenomenal to be in the space. I think VanEck is one of the most amazing brands, and we span kind of everything from like an early stage company to a publicly traded company and everything in between. So I think you're going to see a lot from us. I can't really like leak anything, but I think, you know, follow us on Twitter. We're the VanEck Intern. We announce all of our private investments, all of our publicly traded funds. So we're pretty vocal. And overall though, I think it's kind of like what a time to be alive. It's been pretty incredible.
Love that. Last thing, plug your Twitter. You plug VanEck's Twitter, plug yours, and then we'll fly.
At Wyatt_Lonergan. It's just my name, WYATT_LONERGAN. My partner Juan is 0x Laguna, LAGUNA. So we publish a lot about our theses. Every investment we do, we write a memo. Yeah, it's like so much innovation that's happening. So I think, you know, very fortunate to be a part of it.
Love it. Folks, what an episode with Wyatt GP at VanEck Ventures. You guys already know who VanEck is, but if you don't, go check them out. They're absolutely huge and they do things the right way and they are early to the party time after time after time. And Wyatt and Juan write fire research pieces as well. So go check those out. Huge shout out to Wyatt and the team for making this happen. If you guys enjoyed this one, and I hope you did, please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys. Thank you so much for everything. My American listeners, love you guys. I hope you had a lovely 4th of July by the time this airs. Canadians, happy Canada Day as well. Keep on growing those bags and keep on staying healthy, wealthy, and happy. Love you guys, and we'll see you on the next one. Ciao.